Major news happening this afternoon. RFK Jr. is coming out endorsing President Trump for the presidency. Donald Trump responding, saying, "This is big." Wow. I'll tell you, you know what? It is big. It's pretty epic. I mean, I'm here with Rob Hordon, my colleague over at 76 Research. And, you know, we'll get into the markets in a second, but it's just sort of like, let's take a moment here to think about how amazing this is, and just the turn of events that have led us to this moment in time. It's pretty crazy. It's wild. I say all the time, we're like on the front lines of history being made.
Yeah, it was a pretty impressive speech he gave. I was able to watch it. I saw it pop up on my X feed and dialed right in. And it's just sort of that's fascinating, right? That the way that message gets delivered to us now in real time, and the impact he's able to have. Wow, he had quite a bit to say, and it's interesting the alliance that the two of them are forming. I mean, I think there's some serious disagreements, particularly around economic policy, but there is now this kind of interesting alignment between, that RFK perspective and critique of various industries, and the idea of, various industries being captured by the government, or the government being captured by the industries. And, Trump's conservative economic populism that is also a real departure from previous Republican kind of positions.
I mean, we can talk about what it means for markets, for investing, et cetera. But I just want to take a moment and, just from a political perspective, give you my 2 cents, which is that the Trump campaign actually kind of needed this at this moment in time, because Kamala was sucking all the oxygen out of the room. I was speaking with somebody the other day who originally, I thought, was going to be voting for Donald Trump, and she watched the convention and she was a little confused. Like, I think she was, she loved Michelle's speech, and this was before Kamala had spoken, and she said, "Oh, I can't wait to see her debate Trump." And I'm like, "Wait, but you mean Kamala, right?" And she's like, oh, Michelle, but she just had this sort of, she was basking in this excitement of the moment and women and this and that and the other. And I'm like, okay, like, can somebody please just sort of take a deep breath and drill down on what this woman, Kamala Harris's policies really are? Because to me, like, they'd be extremely detrimental for the economy, for markets, et cetera, and frankly, our future as a nation. But a lot of voters aren't really getting into that. They're sort of, basking in the glory of Hollywood and the excitement and the balloons coming down, et cetera, and not really thinking about, hey, this woman's been there for the last 3.5 years. Thank you very much. And look at what we have to show for it. Not much, just a ton of inflation that's been quite extraordinary. So I think he needed this from a political perspective, I would just say. I think he needed this sort of jolt of energy. Donald Trump, obviously, full of energy himself, but he needed a little bit of a distraction in the storyline. And I think that this is certainly going to provide it for him. I would also just caution people, I'm looking at some of the media, and over and over and over again, what I'm seeing is sort of this RFK Jr. drops out. In even the Wall Street Journal, the headline right now being that RFK Jr. drops out of presidential race, endorses Trump. So they're sort of highlighting. New York Times, I don't even think, mentions the Trump thing. It's just that he's done. And there's kind of an effort to sort of push him down, if you would. RFK Jr. suspended his independent presidential campaign and endorsed Donald Trump. That's a headline from 6 minutes ago in the New York Times. So they're going to have to reckon with this. They've definitely excluded him. He made that very clear in his commentary today, Rob, that was really very profound in my estimation, and directed directly at the media. He even said, some of you guys are in this room. He was very thankful, if you would, for the alternative media, of which we all are part of at the Trish Regan Show and here at 76 Research, because it's just a new way to connect with people. Let me go to RFK Jr. now.
I'm sorry to keep everybody waiting. 16 months ago, in April of 2023, I launched my campaign for President of the United States. I began this journey as a Democrat, the party of my father, my uncle, the party which I pledged my own allegiance to long before I was old enough to vote. I attended my first Democratic convention at the age of 6 in 1960. And back then, the Democrats were the champions of the Constitution, of civil rights. The Democrats stood against authoritarianism, against censorship, against colonialism, imperialism, and unjust wars. We were the party of labor, of the working class. The Democrats were the party of government transparency and the champion of the environment. Our party was the bulwark against big money interests and corporate power. True to its name, it was the party of democracy. As you know, I left that party in October because it had departed so dramatically from the core values that I grew up with. It had become the party of war, censorship, corruption, big pharma, big tech, big ag, and big money. When it abandoned democracy by canceling the primary to conceal the cognitive decline of the sitting president, I left the party to run as an independent.
So again, we've been watching here RFK Jr. speak about his reasons for making this switch, if you would. And Rob, back to you for a moment. I think it's pretty fascinating that this is all going down the way it has. He was quite forceful in his frustration with the Democrats and sort of the establishment that had kept him, if you would, from achieving what he felt was his rightful due. I mean, he talked about how at one point he was significantly high in the polls, some 20%, but they were never going to give him the time of day.
Yeah. And, when I think about RFK, I mean, I think about him really as kind of a traditional Democrat, right? I mean, as he was just explaining himself, as opposed to the version of the Democrat Party that we see today. And you kind of speak to some of the older folks who've historically voted Democrat, kind of those Kennedy Democrats, right? They really are not in agreement on so many issues versus kind of the more woke, postmodern version of the party that we see in a candidate like Kamala Harris. So I think it's impactful because, it's one thing for a conservative politician to endorse Trump. But here you have a traditional liberal who has a lot, say what you will about him. He clearly believes, he's a man of his own convictions and he has a lot of integrity and authenticity, and he's supporting Trump. And I think, when it comes to these critical undecided voters, whoever they are in these swing states, they're very open to his message, and it could be influential. I mean, this is a tight race,
Yeah,
50-50.
I mean, I think for sure it's influential. I'm going to jump to Polymarket, which as I pull this graphic up, maybe you can just explain like what these betting markets are. Polymarket is kind of seen as super cutting edge. You and I were talking about Polymarket, in fact, just last night. And ahead of Kamala speaking, what was fascinating was actually he was doing quite well. And I said to you, oh my gosh, like he's doing so well in Polymarket. And then she spoke and he came down a little bit, but he was still a point ahead, which is nonetheless, in the scheme of things, very interesting. And then as soon as this news broke, I'm going to look at Polymarket and see if it's changed since. But the numbers, again, started to suggest more upside for the Trump campaign. So why is this relevant? Why is this in some ways maybe more interesting to a certain extent than polls?
Well, yeah, it's really the market. It's investors, gamblers, really, investors, whatever you want to call it. People putting their own money on the line. Expressing their perspective on what's the likely outcome. So when you think about markets, they're very, historically they're very good and efficient predictive mechanisms that take into account all the available information, just like stocks or bonds, right? And so it's a more interesting tool than the polls, which I think polling these days is very flawed, just in terms of the potential biases that exist in the polls and the polling organizations. But a poll, when you see a poll and you see like a candidate having 52 to 48% of the vote, that doesn't necessarily translate into a probability, right? So the betting markets are giving you actual implied probabilities in the eyes of the collective wisdom of the investors.
Visible
So
hand,
the
right?
two big ones,
Markets
right,
and yeah, money on the
the
line.
two big ones are predicted, which is I think the original one, which is sort of a cash based system, and then I guess Polymarket is a crypto based system. And it's interesting that there's a bit of a divergence. The predicted platform seems to favor Harris at the moment. Polymarket seems to favor Trump, but it's close.
Consider,
It's plus or
this
minus.
is, I'm just going to show folks, let me see if I can pull it up here. This is the Poly Market as we got the news there that sure enough, RFK was out and he would be, in fact, adding to the Trump campaign, his endorsement. I mean, very, very sort of interesting stuff. And just a reminder to take a look at our website, if you would, 76research.com, 76research.com, where we have all of the financial research that, frankly, I mean, I'm so proud of this, Rob, because it's very hard to get genuine, really, I think, transparent research. And when it comes to your money and investing, it's quite important.
Yep. The whole premise of our business here is that we have no conflicts of interest. We're just telling people what we think will work. And our path to success is being right and giving people good, high quality recommendations and information and insights. So that's our approach. Specifically with respect to RFK, I'm just thinking, if you sign up for the 76 report now, you'll have access to the whole archive and all the back issues we actually wrote about. We've written about him quite a bit. There was a piece about his position, with respect to the gold standard and the Fed. And I think that's an interesting piece if people want to learn more about RFK and his point of view.
Now, he's got some very interesting points of view. And, some investors might actually be a little bit nervous about it because there's certain sectors that would be under fire, everything from pharmaceuticals to the food industry. The food industry, which, he came out swinging against today, Rob, saying, look, they're responsible for all these chemicals that lead to sort of this kind of food addiction and overeating, et cetera. I thought it was fascinating because you could see sort of a Philip Morris kind of thing happening there with food. I mean, one of the things that I'll point to is that Donald Trump certainly doesn't agree with him on everything. And I don't know if he entirely agrees with him on the food thing, only because I think Trump, knowing Trump, would be sort of libertarian about it and kind of like, well, hey, you know what? You want to eat junk. That's your business. I mean, he certainly, he himself loves McDonald's. So you're not taking that away. But here he is talking about how he would be honored if RFK endorsed him. And again, they're going to be speaking in Arizona.
So I've known him for a long time. He's as you know, he's a little different kind of a guy. Very smart guy. He's a very good person. If he endorsed me, I would be honored by it. I would be very honored by it. He really has his heart in the right place. He is a respected person. Women love some of his policies, and I guess some people don't like some of his policies. But overall, I thought the Democrats, he was a Democrat. I don't know what he is right now, but he was a Democrat. They treated him very badly. I think he would have, he goes around saying he would have beaten Biden in the primary. I think there was a good chance. What they did to him was what they did to Biden. They really were harsh and threw him out. They wouldn't let him go to the vote. I mean, they made it impossible for him to compete in primaries because he was doing so well. And they basically made it impossible for him to do what I think he would have been successful. I think he would have overthrown Biden because Biden is so bad as a president. When I hear this talk about
Okay, so in other words, he thinks very, very firmly, strongly that he got the shaft. Right? RFK got the shaft. I think RFK would I mean, we heard from him. He agrees with that.
Yeah, and it's and the compare. Actually, when Trump said that, it kind of made me think. Right, it is very similar to what happened to Biden. It's like the party is the party, and they take no prisoners. They don't want to hear from the voters, right? So RFK has this sort of groundswell of support. Nope, you're not going to get on the ballot. We're going to do everything we can to keep you out of the competition. And then, Biden himself insisting he's going to be the candidate. Nope. The party said, no, we don't think that makes sense. You can't win. And then it's going to be Kamala. So it's like, a very interesting comparison that who's in charge here. It's a very much a kind of a party dynamic, not what we're traditionally used to in American politics, which is kind of candidate driven outcomes and candidate driven leadership. Here it's party driven.
So
like some other countries.
All in, we look at the market today. The market had a heck of a day. Again, up. I think a lot of that is related to Powell, and we can talk about the Fed and where that's all heading. But you look at the markets today, Dow up a percentage point, same with the S&P, NASDAQ coming up about 1.5%. And here they are sort of recognizing that, suddenly there's a better shot at a Trump presidency. I don't know how much the market can read into this right now. I do know that 28% corporate income tax, should she get it through, is not going to be great. I kind of look at the ridiculous idea that you're going to tax people's investments on unrealized gains, right? Like you own a stock, it goes up, even though you haven't sold it yet, she's going to tax you on it. It's insane and probably unconstitutional. And I don't think that would actually, let's hope, get through. But the idea that she's even talking about this stuff, it gives you a lot of insight, a window into who she is, what she believes, how she thinks she can wave a magic wand and just fix everything with, everything from price controls to $25,000 handouts for new home buyers in hopes that, this is going to reduce the housing prices that have grown so extraordinarily high. And it's all wrong. That's what just amazes me. It's all so darn wrong.
Yeah, but it's you just shake your head. And the tax on unrealized gains, a lot of people have been focusing on that one. That is just very dangerous because it just as a practical matter, people don't value, like what we saw with Mar-a-Lago, right? Valuation, that's a very nebulous thing. To one person it's worth 14 million, to another person it's worth 500 million, right? So valuation is always ambiguous. People don't have liquidity. They can't, so some sort of theoretical appreciation in an asset, and now you have to cough up, a huge percentage of cash. So it's just like completely impractical. The VC community is, if you hear from them, they're particularly affected, right? Because you have these startups, who the heck knows what they're worth, or they could go,
they
9 out of 10 of them end up
right. Like you can't value it until it actually sells. So until you sell the stock, you don't really know what it's worth. Until you sell your home, you don't really know what it's worth. It's very obvious and yet frightening that this is the path that she's going down. But look, she's not the only one. You think about Elizabeth Warren, and I want to share with you a clip of Elizabeth Warren with Joe Kernan today. We can sort of jump in because it's rather lengthy, but wow, he let her have it. So I know Joe. I worked with him at CNBC. He's for sure a fiscal conservative, like a very, very strong fiscal conservative. And you get this liberal nutty professor on there talking about how it's all the company's fault that prices are so high. It's like, lady, you're the one who had the Inflation Reduction Act. You're the one who stimulated the economy to the tune of $1.8 billion. You're the one that just kept giving out more and more stuff. And you think that that's the answer to everything. It's really rather remarkable. Anyway, let's go to this because Joe and Elizabeth Warren really kind of got into it, and we can talk about it some more here.
I can paint you a picture of how that would work and how it's worked in the past, where we've tried to artificially hold prices down. Competition doesn't come in. People don't, like if beef is too high, people don't move the chicken. The competitors don't come in to undercut where the beef prices are. Nothing works when you try to artificially control prices. It's just a supply and demand issue. It's a flawed idea.
So did you have a question here?
Yes. Why would you propose a flawed idea when the real problem...
So let me ask.
By the way, the producers are like, no, he didn't. I can see the control room now. They're like, we're never going to get her back as a guest. He didn't really say that. But why would you propose a flawed idea? Here's her explanation.
I want to help the middle class. If you really sincerely want to help people having trouble at the grocery store, It's not price gouging that's the issue. And if you look at it seriously and really want to help them, then let's do something about it together. Fine.
I understand if you want to do a lecture about this, but let's just start with where have you been for the last 30 years as 36 states have price gouging laws, and they have used them effectively. States like Texas and Florida, they've used price gouging laws. Price gouging laws are not price control.
But don't you think it's important, Rob, to understand the distinction here between what is being alleged and actual price gouging? So she thinks there's price gouging because why else would you be paying 57% more for eggs? But in actuality, when you go and you look and you analyze these numbers, as you and I have, the profit margins have collapsed effectively for a lot of these companies. And consequently, they're not price gouging. They're just trying desperately to pass along some cost to consumers. And in doing so, are having to absorb a lot more of the pain themselves.
Yeah, they're picking on, it's funny that they're picking on a sector where there's just really weak evidence to suggest that there's been margin expansion, or, we looked at it and there hasn't been. So it's a very competitive sector, and, it's sort of strange, but this is strategic on her part. And I think, Elizabeth Warren is one of the more intelligent leading Democrats out there. And she must realize this. Whereas maybe some of the others actually think price gouging is the problem. But it's an opportunity to, the public, look, inflation is a complicated subject, and there's a lot of competing ideas about what you can't know the causes of it precisely. So you throw in this alternative theory that it's all, the bad corporate actors, and it's these kind of antitrust abuses, and that explains like half of it. And that's just not plausible. It's like maybe, 0.1% of the inflation, but they just want to deflect attention to, this convenient theory.
Well, Kernan points this out, so it's kind of funny to watch. We should take a peek.
Price gouging laws are to say, sometimes markets go off the rails. And when they do, we need some ways to get them back on the rails. We need some curbs on that behavior. So, for example, we watched in the pandemic how prices went up for a whole lot of reasons. They went up partly because we had supply chain kinks. We had problems because of the war in Ukraine that cut supplies of certain commodities. And one of the things that happened as a result of that is there were corporations that said, whoa, now that we have inflation, now that prices are up overall, this is a great opportunity for us to raise prices, not just in passing along costs, but to go way, way, way above that. And how do we know that it was way, way above just passing along costs? Look at what happened to their profit margins. If they'd just been passing along costs, profit margins would have stayed about the same. But for some industries, some companies, profit margins shot up. And do you know where they shot up most often? It was in companies or in industries where there was a lot of concentration, a lot of market power, places where the market is not functioning competitively. So you end up with someone, you remember we all talked about egg prices. You end up with something like this giant egg producer, Cal-Maine. And Cal-Maine raises the price of eggs. Their profit margins increase by 718%. That's not just passing along costs.
Senator,
and that is a time
that's sophistry. Your example on Kraft. Your example on Kraft is even worse.
You finished first. In any of the states around the country that already have price gouging laws in place.
Can I tell you why those are fallacious and misleading at best? And your Kraft analogy is even. Why can't I tell you? Please let me tell you. Kraft, you say, was 440% profit increase. The example you used, the prior quarter from the year before, they had a charge of $1.3 billion, an accounting change which wiped
Whoa, gosh, I didn't mean to. Let's go back. I want to hear.
out profits. Then they earned what they normally.
look at the
Let me
data.
finish now. They earned.
You didn't let me finish. Look at the data. Come on. We have economic study now after economic study.
This is
and
the way
what
it
do they
always
show?
goes.
When there is more
Senator,
concentration,
40 million eggs were destroyed because of avian flu.
When there is more concentration in an industry, we have seen much greater increases in
Do you attribute
the
the
profit
inflation?
margins.
That's what you
And
think we need to do to solve it?
They're not random. They are not random one-offs. It is part of the problem when you've got companies that are gouging consumers on prices. Consumers need to know they've got somebody on their side.
Senator,
and
listen, we're trying to help. We're trying to actually do.
Where are you in the 37 states that currently have price gouging laws?
Just quickly on that point, Senator Warren,
This
is Kelly here. Can I just clarify how this would work?
This is the way you never lose an argument because no one can ever say anything back to you, Senator.
The state price gouging
frustrating.
laws.
Anyway, I mean, he was kind of at his wit's end with her. It's a fundamental sort of different view of things, Rob. And bottom line, she's got a political reason for being the way she is.
There's something even worse going on here too, because she's sort of normalizing this idea that there's something wrong with companies charging, what they want to charge for their product, right? So this idea that you're only supposed to pass through costs as they go up, and there's some sort of cap on your margins. And I think that's, there's like an underlying. That's like another factor here that you kind of have to think about when you listen to Elizabeth Warren, because that's not how our economy works. Companies can charge, they can't conspire with one another. There's all kinds of antitrust laws, but they can charge what they think their customers will pay, and they can earn healthy margins. And you know what the solution to that is? Another company comes and tries to compete with them. So we've talked a lot about NVIDIA. It has 65% operating margins. It is a very profitable company. It's not a cost plus situation, right? They don't just pass through slightly above their costs. They're making a lot of money because they have a unique and really good product that their customers desperately want, and they're charging whatever they please. And they've created trillions of dollars of value because of that. And that's not wrong. And so if we're in this mentality that, it's gouging to generate profits for excellent products, like it's a really dangerous path to go down. When we look at our holdings in the model portfolio, we're looking for pricing power. We're looking for companies that have, a competitive advantage, a special product, and an ability to earn healthy margins. And that's sort of how value is created in business. So I take even further offense. Not only is she being deceptive about, the real causes of inflation, but she's sort of like normalizing this idea that corporate profits are inherently, predatory and they're inherently bad. And that's just not how capitalism works.
Well, I mean, we wouldn't be where we are, right, as a nation, if in fact that's the way it was. I mean, we have the success we have because free market capitalism has been very successful. And granted, look, it's not perfect, this, that, and the other, and we can debate that on the margin, but she's basically trying to throw the whole thing out, as is Kamala Harris, by the way. So it's quite alarming. It's quite disturbing that this is sort of the mentality that they are embracing. You mentioned AI. Look, I think NVIDIA is a really interesting place to start. NVIDIA has just been on a tear. People are so excited. I, for one, I know you are as well, very, very excited about all that can be. Gosh, I feel like Kamala, I'm burned by all that can be. It's kind of a strange thing to say, but all that's coming, right, within the tech sector, because it's just enormous, these changes, and they're going to have massive, massive ripple effects on so many different things in so many different industries. NVIDIA has these enormous profit margins because it's sort of, the only game in town right now, but that's changing, that's shifting. So when we look at, for example, our American Resilience portfolio, and by the way, guys, if you're watching this live, we do have 76 Research there on the bottom of the screen. I just added it to the chat as well. So 76research.com, that's the company, or go to 76report.com. If you use code word dollar, DOLLAR, you can sign up. It's just $1 a month. So, hey, no harm, no foul. And you can get this research for the first couple of months. It goes to $9.95 thereafter, but the introductory rate is $1 a month with code word dollar. Go and sign up, 76report.com or 76research.com, and get this. But one of the things that we try and do, certainly within the model portfolios, is say, okay, you know what, if you're in NVIDIA, and you probably are if you're in an S&P 500 index, which is a good place to start, by the way, if you're just getting started investing, you are going to have exposure to NVIDIA, maybe more than you want, right? Because these Mag 7 that are very dominant within the S&P give you a lot of volatility. So we've tried to kind of look outside that space to say, okay, we believe in this. We do believe there's fundamental change coming, and there will be so many beneficiaries. So who are the beneficiaries that are a little less affected by, maybe compressed margins that eventually, as there's more competition within the tech space, within the semiconductor space, that NVIDIA is going to feel?
Yeah, and NVIDIA, it's actually, I think, more or less back to its highs after a very volatile August. The tech sector, the market as a whole, just sort of roaring back here with the Fed action. But NVIDIA reports, I believe, next week. That'll be very interesting, not just for NVIDIA, but for market sentiment as a whole. Will they kind of beat the high estimates that are already out there? Trish, I think the other day you kind of, I missed it at the time. I think you were trying to get me to talk about Digital Realty, which is a holding that we have within our model portfolios and have written about. And I think that's an interesting one to kind of put in this context of
okay. So let's back up for a second.
Yeah.
So if we're talking about, we want an AI play that is not NVIDIA, right? Because NVIDIA is volatile and NVIDIA has enormous profit margins, which one has to think theoretically will come down in time, et cetera. So if you love the AI space, but you don't want to be in NVIDIA or don't want to be just directly in semis, there's an alternative. And it's Digital Realty.
Yeah. And one thing so Digital Realty, they own the data centers. They own, many, like some 300 data centers, and they partner with the hyperscalers. And that's where the NVIDIA powered products, the servers are located, right? So they're like kind of the physical premises for all of these AI servers. And I think what's kind of interesting is, we've been talking about the idea of an AI bubble, and not just us, but the industry as a whole. And the idea that the hyperscalers, the Mag 7, are over investing in AI, they're buying too many, or the idea that NVIDIA's profit margins and its profitability isn't sustainable because there'll be competition. And what I kind of think about that is that actually does create opportunities. Like if we relate it to what happened in the late 90s when all of that fiber capacity was overbuilt, that was really bad for the investors in the fiber companies. But it was good for the customers of the fiber companies, which were like internet service providers and the rest of the internet ecosystem, right? So, if you think about a situation where NVIDIA actually can't sustain its profitability and its margins, and there is kind of a bubble in NVIDIA, that could actually accrue to the benefit of other players within, the AI space, because, NVIDIA is really taking a lot of the profit pool. And if you lower costs and you lower the price of NVIDIA chips, or just chips in general for data centers and for AI purposes, that frees up budgets and allows for a lot more investment and a lot more AI. So, I think they're not all, you shouldn't think of them all as just sort of being like aligned with the same patterns and trends. You can really pick your spots, and to some extent, if there is overinvestment in AI or excess profitability at a stock like NVIDIA, and that unwinds over time, there could be other stocks that would benefit. And I think, there'd be more investment in data centers if GPUs became commoditized and got cheaper. So I like how DLR, Digital Realty, is positioned. Also they have these sort of like longer term contracts. So it's a more stable kind of contractual recurring business model versus say a chip manufacturer.
Yeah. And actually I would just point out, in the American Resilience portfolio, there's other plays like Digital Realty. So people should go there, go check it out. Again, you can get 76 Report. Go to 76report.com, use code word dollar, DOLLAR, and you're going to get a lot there. But the real key really is those more model portfolios. I'm just laughing because Douglas, I'm glad Douglas says he is very happy with his income portfolio from 76 Research. I'm glad to hear that. The income portfolio is really designed to be something very steady for folks. And, granted, we are doing the best job we can here. I happen to have gotten myself paired with probably the most brilliant stock picker out there. So I consider myself very lucky, and therefore you guys very lucky to be able to have access to someone like Rob. But the whole idea behind, say, something like an income builder portfolio is really, it's designed to be steady Eddie, but provide you a little bit of income in your retirement, and different slightly than, say, the American Resilience portfolio, which is looking for more of those tech plays that are maybe just outside the normal scope that you would get in, say, an S&P 500.
Yep. Although we have some growthier names within the income builder. So with the income builder portfolio, the average dividend yield at this moment is around 4%. So significantly higher versus the broader market, which is like closer to 1%. In what we really, we try to find like the best opportunities, specifically in terms of the income builder, with sort of a higher dividend paying stocks across sectors. So really cherry picking the best ideas and giving you some, sector diversification as well.
Yeah.
And that's true across the different strategies.
The Federal Reserve, of course, tinkering as it always does, announcing today at their big shindig in Jackson Hole, Wyoming, that in fact I'm just seeing if I can find the sound here for everybody to hear. Jerome Powell coming out and saying, "Look, we gotta move, right? We gotta cut. Here we go. Here he is." Yeah.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
Okay, so there you go. Jerome Powell feeling quite strongly that he's going to have to move. It's just sort of funny, Rob, because they never get this right. They're just always day late, dollar short, or a day early and too many dollars ahead. And it's everybody's frustration with them. But look, we just saw this week, it's not like they're dealing with the best data, shall we say.
No, yeah, that was just a shocking revision. There was an expectation that it would come down, but that was a pretty frustrating development to just see the extent to which you listen to Powell and it's like, yeah, the time has come. I don't mean to be too conspiratorial on a Friday, but it's like, okay, the election's within 90 days. The time has come, right, to pivot on interest rates.
But here's the thing. If he really wanted to do this, I'm just like, it takes 3 to 6 months, unless it's just all anticipatory and he figures, okay, well, the market's going to run up and that'll be good for Kamala. But, it's going to take a while for any of this to really catch up with the overall economy. And that's that lag factor that people aren't necessarily always considering.
Yeah. But the stock market, as we see, the stock market immediately reacts to, kind of a regime change on interest rates, right? So, the stock market's really happy right now because now, we're getting Powell not being ambiguous about it, saying the time has come. We've gone from, interest rates went up and then they plateaued and now they're coming down, and investors realize that's going to be a trend. And, so people are putting money back into the market, and with good reason. You don't want to fight the Fed. It is favorable for businesses and for valuations to have lower interest rates. I guess the thing investors could worry about is, like, is the economy in fact falling apart, as some of this data suggests? So, you're sort of balancing between, you want the economic weakness because that's going to lead to Fed easing, but you don't want it to go overboard and be too weak.
No, that makes a lot of sense. I mean, you, by the way, just a reminder to subscribe. I think that just popped up on the screen. You can subscribe to 76 Research, hear this channel on YouTube. If you're watching on Facebook, we thank you for that. And then, of course, I do encourage everybody to go and get these model portfolios and to really kind of sort of hone in. I mean, you're coming up on the weekend. It's a good opportunity, if you would, to do this. And Rob and I kind of walk you through what are the opportunities within each of these sort of spaces, as we said, with the model portfolios. But I think the reality is that you just have to be prepared for a market that's going to continue moving higher. Like I mean, the Fed just kind of told us so much. I mean, anything could happen, we'll see. And investors may get spooked if we have Kamala coming in. But I think there's a lot of reason to sort of, I just have a hard time betting against the United States of America, certainly in the long term.
I agree. And I think what's also interesting is, we're now moving towards easing, but the inflation is still with us. But, that second part of the mandate, full employment or maximum employment, is kicking in. So it kind of raises the question, are we going to tolerate higher levels of inflation in our economy in order to stave off, a contraction, an unacceptable contraction in the labor market?
We can inflate our way out of debt, right? Along the way.
Yeah. So it's sort of, but that when you think about stocks and businesses, I mean, their earnings are based on a nominal economy. So inflation, is in a way helpful for corporate earnings and for growth, even if it's kind of phantom. You're investing, paper money anyway in these businesses, and it's just a way to, just like gold, it's like a way to participate in that, kind of nominally inflating economy.
It's true. And if you don't, I mean, the risk is, the train leaves the station and you've been left behind. Because if you just put it all under your mattress, good luck. Your dollars are effectively losing value every single day. Anyway, a lot for people to think about. I do encourage you to go to 76research.com. I really encourage, take a look at those model portfolios. Consider signing up for the Founders Club, because that's the best discount you're going to get. You get all of the model portfolios, plus you get the 76 report. Or if you just want to wade in here, go to 76report.com. or 76research.com, sign up for that 76 report, code word dollar, and really, start, I think, taking an active role. The time is now, for sure. The time is now. Rob, I want to thank you for your time this afternoon. I want to thank the viewers for all of their input. And I'm, if you see me looking off camera, it's because I'm looking at all of their comments as they come in and trying to help incorporate them into the conversation. Have a wonderful weekend, everyone. You're going to see clips on the @76Research YouTube page. So go and subscribe. This stuff is all free. Go to the website. And hey, if nothing else, just sign up for the free stuff. I keep telling people, peruse the website, read the articles, learn something. Have a wonderful weekend, and we'll see you Monday.